In this video, we're going to be taking a look at my options account and just looking at the progress I've made over the past few months. I just wanted to be transparent and show you guys what I'm doing, and then we're going to talk a little bit about some of the things I've learned and some tips I would suggest for beginners if you're looking to get started selling options on a regular basis. Hey, what's up guys? Welcome back to the channel. If you're new here, my name is Frank Mularcik, and most of my videos are focused on dividend investing in the stock market in various methods, but most of my investments that I talk about here on the channel are with dividend investing, but I also do some options trading, you could say. So I want to talk about that a little bit as well, because that's something that I find pretty interesting, and a lot of people I think will find that interesting as well. So that's why I wanted to share that with you. If you are new here, like I said, make sure you subscribe so you don't miss out on any of the future videos, and if you would just like this video, I would really appreciate that, as it would really help out the channel. So right now you can see my options account is right around $5,300, and when I started I just put $5,000 in here, so we've seen a little bit of growth over the past few months. If we look at the 3-month time frame, I started this right at the beginning of February. I think the first day was February 1st. So at that time, you can see we had $5,000 there, and then now we're at $5,308, which is about a 6% gain. So I'm pretty excited about that. And the thing I do like about options is that you are constantly realizing those gains, meaning if the market goes down, normally when you're just holding a stock, if you're just holding a stock for the long term, if the market goes down, well, then your position goes down, and that looks awful. And then when the market goes up, your position goes up, and that looks great. But none of that really matters unless in the long term the market continues to go up, which is more than likely to happen in a lot of circumstances. But the thing I do like about options, like I was saying, is you're sort of taking in profits over time and putting those into your cash balance, which is sort of like dividends as well, which is why I like dividends too. So it's kind of a similar strategy if you think about it. You're just generating that income in a different way, and you're not investing in these high growth stocks that are going to really return you a ton of money based on the capital appreciation, but you are getting that income that you can then reinvest back into other things to produce even more income. Right now I have just 2 options open, a Palantir option and a Rocket option. So if we look at those real quick, the Palantir option, I sold a put sometime last week around the let's see here, what strike price, the $23 strike price, and I got about $30 for that, and that expires this coming Friday. So we'll see how that goes. Right now Palantir is about $24.40, so it's fairly safe, but I am in the red a little bit on this option because Palantir has dropped significantly from actually when I sold it, but I think we'll be fine with it either way. And then if we go back, we can look at the Rocket option I currently have. This one is a little bit better, but I am even more in the red on this one because I sold it. I think Rocket was around $24 or $25 when I sold this $21.89 put, also expiring next week. So you can see here I am in the red about 50%, down $16 from the $28 that I received, but that should be fine in the next few days. I think we'll be fine, and if it keeps dropping, then I might have to take a small loss, but it works out in the end. So if we go over here, of course I had to make a spreadsheet, so this just shows every trade I did, and then I have the date I opened it, the trade, the date I closed the trade, and the expiration date. And then so far I've just been doing cash secured puts for the most part, and then I talk about my strike price, which calculates the amount of capital that is being used based on that strike price, and then I count for the premium I receive, and then if I buy the option back before expiration, which I do in the vast majority of cases, then I put this amount here for the amount that I paid to buy back. And then if it expires worthless, I just put yes here, and it calculates my profit percentage, right? So as you can see, most of these trades are profitable, around 0.5% all the way up to 1.5%, 2%, you know. So those are, just small profits on each trade based on the amount of capital I'm investing in that trade or putting up on that trade. So it's really not huge returns on every trade, but it's just consistent, a few a week. And the things I want to talk about as to what I learned, I think one of the things I learned is it's a lot more risky to do this on smaller companies because they can move a lot, which that makes sense. And I was, thinking that at the beginning, but I was still kind of tempted by the higher premiums of some of these smaller companies. So I sold a put or two on Hyliion, which in the end it worked out for me. But after that, I decided just to stop doing it because Hyliion's only like a $1 or $2 billion company, which is pretty small compared to some other ones. So I decided to stop doing that, and that was probably a good move because Hyliion actually took a big hit a few weeks ago, I think. So if I had a put on at that time, I would have been in deep trouble there. And then one of the other smaller companies I sold a put on was CC Chemours, and I got in some trouble there. And I ended up, if you go across here, you can see I took a fairly substantial loss there, over 2.5% on that one. But I basically rolled that one, so I got a $25 credit when I sold the put, and then I bought it back for $90. And then this one right here was for expiring a few weeks later, and I sold that one for $97. So I'm basically up a little bit on my trade from before, and then I bought that one back at $25. So I sold the first one, I received $25, and I paid $25 back when I bought back the second one here. So that means my net profit was the difference between what I bought back the first one and what I sold the second one, which is $7. So I really only made $7 on that trade, but it's a lot better than losing money, And then the other big losing trade I had was with Canopy Growth. Definitely from now on I won't be doing anything else with them, but I just thought, they have good premiums, they're down like 8% today, I'll go like 15% out of the money or whatever like that, and I'll be fine. And then of course it didn't work out like that, and they just went down like 10% the next 2 days, and I could have held it over the weekend and hoped for it to go back up, which it eventually did. So if I just held it a little bit longer, I probably would have either not lost as much money or probably about broke even or even made some money on it. But the fundamental reason I got out of the trade was just because I didn't want to be holding an option in a stock like that, and I realized that I should just never have even gotten into that trade. So it just kind of taught me a lesson there. And so I've been trying to stick to better companies. You see, I did sell a put on Neo, but they had just been on a constant downtrend for the past like 2 weeks, and I just did not see them continuing, and I sold it way out of the money. So I sold a strike price at $23 when they were at like $35. So definitely it's all about risk management, So I was thinking that is a fairly safe play, and even if I do get assigned or something like that, I really did not think that Neo could keep dropping much further after that. So, and another of the maybe like hype stocks I sort of put on was Plug Power, but that one actually worked out really awesome for me. I sold it for $36, and then I bought it back for $18 in the same day. So I made $18 in one day. So I'll take that any day of the week, But as you can see here, the ones I've been doing a lot are Palantir, Rocket Companies, and Carnival Cruise Line. I haven't done many Carnival Cruise Line recently because they've just kept going up and up and up, so that's generally not the time when you want to sell a put, right? But Rocket and Palantir have been generally going well for me, so I've just continued doing those over time, and I'm looking to expand into other companies, but there's no reason to change it up if what you're doing is working. So another strategy that I have used once, aside from selling cash secured puts, is something called the poor man's covered call. So basically what you do is you buy a long call that's set to expire in a year or two. So that's what I did here with AT&T. So I bought a call that expires in January of 2023. And the strike price, you want to make sure that call is deep in the money, and so the strike price I bought was $23, and that's when the stock was trading around $28.75. And then basically what you do with that covered call is you just hold it, and then you sell, or with that long call is you just hold it, and then you sell covered calls against that long call and generate premium from that, which I have done here. And the benefit of doing that is that you can see here, my total amount invested into this long call is only $630, right? But if you were to go and buy 100 shares of AT&T so that you could sell calls against it, well, you would have had to pay $2,875 at the time that I bought this call. So it's a way basically to sell covered calls with basically less capital invested. So the downside is that when the covered calls make you money, that normally means the long call is going to lose you money. And when the long call makes you money, the covered calls are probably going to lose you money. So it's kind of a strategy you have to work with and kind of make it just right to work out. And if you look here, basically once I sold 3 covered calls, then I basically closed out the trade and sold the long call, and then I was basically done with that trade. So as you can see right here, my covered call profit was actually negative $41, and my long call profit was actually $100. So if I just held the long call without even selling covered calls, I really would have been better off, but you never know what's going to happen there. So you can see my cash on cash return was 9.37% for this particular poor man's covered call, which is pretty good, I think. So I started this trade on February 12th, and then I closed this trade on March 12th, so really a month, and I only had $630 invested. So that is a pretty great return in my opinion. So I also just keep track of the value of the account every week. So these are just the changes, but this is, based on market fluctuations some as well. So I also like to keep track of the profits that are realized, meaning no matter what happens with the market, I'm not going to lose those. Those are in my cash balance or whatever. So I like to keep track of those because you can see this 1 week when my account was down fairly big, you can see I did have a negative realized profit, but this other time when my account was only up 0.5%, I still had $80 of realized profit that week, which was my largest amount, as you can see. And over here is just kind of a monthly view. So my total realized profits for February was $174. And then for March so far I've realized $151, and I'm hoping to get that up a little bit more, maybe over $200 by the end of the month, but we'll see how that goes. Definitely not trying to push myself to anything crazy and then get burned or anything like that, so I'm just trying to take it slow and steady over time. So just to reiterate some of the things I mentioned that I've sort of learned, one of them would be just make sure you're selling options on companies that you really wouldn't mind owning too much, and you're selling them at a price that you really wouldn't mind owning them at. So that's one of the biggest things, because if a position starts to go against you and you're really not confident in the company, sort of what happened with Canopy Growth, then it's sort of just might be advantageous at that point to just get out of the trade for a loss, which is not what you want to be doing every single trade, So it's better to have companies or sell options on companies that you actually believe in, because then if you are losing out on that trade, you'll have more conviction to stick with it and try to make the best of it, instead of just kind of running away and getting out when you are being challenged a little bit. And then the other thing I would say is just make sure, at least for me right now, I'm sticking to companies with a market cap larger than $10 billion, just because I feel like you just can't be messing with those smaller companies too much, because they can just move around too much a lot of the times, and often just take you off guard. So that's another thing I would suggest. And also, before you even get started with options, make sure you go over to Dave's channel at Hidden Freedom Investing and Gerry's channel at GW ETF channel, and you can check out some of their videos that they talk a little bit more about specific options strategies and stuff like that. So if you guys do want to see me make videos like that in the future, let me know. I can certainly try to make those and try to help you guys understand something maybe you don't understand. So if you do have any questions, just leave them in the comments below, and I will see you guys in the next one.